The Senate passes the 2018 budget, clearing the way for tax cuts. And the stock market roars ahead again. What the heck? A little party never killed nobody. Well, unless you're short or it's 1929, kind of takes your breath away.
A little party never killed nobody, so we gon' dance until we drop. A little party never killed nobody, right here, right now, no we get. Analysts, trips around the world, don't mean a thing if I ain't your girl. It takes your breath away.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market continued to make all-time highs this week. That's despite a very hard down opening on Thursday morning. Tuesday saw the market go through 23,000 on the Dow Jones Industrials for the first time as IBM pushed that index higher with a giant leap. Thursday saw a big move overnight to the downside, which lasted 36 minutes after the market opened. That followed what was a closing flash crash in Hong Kong, which knocked it down more than 2% very quickly, which scared the European investors and brought some selling in. And then Apple news came out that was negative about their orders for their iPhone 8. So that got the market nervous and sold down very hard in the morning. But the buyers, as usual, came back and the market recovered. I'll show you that on the chart coming up in a second. And then Friday, the Senate passes the budget bill, essentially clearing the way for tax cuts. I'm going to say tax cuts because I don't really believe that there's going to be any reform here when it comes to taxes. There's going to be too many dissenting votes. And Rand Paul was the only holdout in there, and he wants deficit reduction versus the estimated $1.5 trillion increase in the deficit that this budget is going to bring. And I say yes to that, and I'm a Rand Paul fan, and we should be talking about the deficit, and all of a sudden everybody seems to have forgotten about that. Well, that's except for Rand Paul. Of course, there were no Democrat votes here whatsoever, and all of a sudden the Democrats are deficit hawks and bringing it up where they were the giant spenders all along. So, you know, it makes sense that they're going to just use the news that defends the position that they want to, which is plainly anti-Trump. So, of course, it's up to the Republicans now that they cleared this, that they can, if they get 50 votes plus Pence, Vice President Pence, then they can then pass some sort of a tax bill. But there's going to be big fights there. Just a little further note about the dissenters in there, specifically the Democrats. They're very against cutting entitlements, and they don't want to cut entitlements and do something that benefits the rich, you know, like the inheritance tax. But, you know, if you look at the statistics in here, let's break down the taxpayers. Those that make between $0 and $100,000 a year, and $100,000 a year for a family of four is not a huge amount of money. That's 84% of the taxpayers. They pay only 15% of all the taxes. Those that make $200,000 and up represent 4% of the taxpayers. So the other 12% fall in the middle. So 200,000 and up, 4% of all the taxpayers pay 58% of all the taxes. How can you get tax reform without doing something that benefits the rich? It's one of the stupidest discussions I've ever heard. True tax reform must benefit the rich. And therefore, you get those people that are builders of capital within the economy, then building businesses, expanding in some much more uninhibited way, and then they hire more people, and it benefits everybody. You could call that trickle-down economics, and those of you that want to argue with me about trickle-down economics, whether it worked or not, I'd love to get into that conversation with you. So here we are, as horrible as it sounds, with nobody looking at the debt bomb. You got to look at entitlements. They really have to be dealt with, and maybe in some very slow way, or maybe stopping expanding the level of entitlements for 10 years in order to bring us into some relative balance. So that's where I am on that, and I think it's pretty significant that they have passed this, and now they can attempt to do something in an unencumbered way, but I have no faith that basically the Republicans aren't neocon, big market, big spenders, big government spenders. So it really annoys the heck out of me, and you can hear that. So let's take a look at what happened in this stock market now that I've had this rant, and take a look at the 60-minute chart of the S&P 500. You can see in here that Monday had a dip, and then, as usual, moves back to the upside in there. Let me just grab my pointer in here so that I can make a point in each of these days. Gotcha now. So this move to the downside, as usual, didn't cause any problem. Sunday night, Janet Yellen had a speech, totally confused on how she got low inflation, but still on course for hikes. Janet, I can explain that to you. What happens is the Federal Reserve builds bubbles. When the bubbles then break down, or when they pop, you go into large deflationary periods. The deflation that occurred from the bubble that Greenspan and Bernanke and you started still has deflation in the economy. So it's hard to get inflation built back up. You did it, Janet. So if you're confused, that explains it to you. Here you get, so this rally that comes back typically on Monday. Look at the same pattern on Tuesday. That's where the Dow tickles 23,000 and then backs off one time and then comes roaring back. There's a Senate bipartisan agreement to keep Obamacare subsidies for 2 years. We'll see if that can pass, as the president has made an attempt to remove those. That gives a lift to the healthcare stocks and helps the market come back. Guess what? On Wednesday, the same thing, a dip, and then the market comes back, though it closed a little bit soft. This is where IBM gives it the lift, but the techs have a big pullback in here early in the day, and that gives it that dip. Choppy day in there. Bond market got hit that day following the European bond market that fell as the index rose right over here. And of course, that IBM earnings helped it early the previous day after they reported. So IBM earnings giving the market a lift there. Now, here's what happened on Thursday. Thursday overnight, as the Hong Kong market closed, there was a big crack of over 2% on the close, and that really got everybody nervous. And then news came out that, you know, Apple has some iPhone 8 woes. The rumor is, and this is, I haven't heard anything that really confirms it, that they have cut their iPhone 8 orders in half because demand is very low. So the market got hit very hard on both of those. This decline lasts 36 minutes and then reverses and then comes all the way back on the day. It's incredible. And then when the news comes out on Friday that the Senate passed that budget, that clears the path for the tax cuts, and you get this giant upside spike. It gave back some of it, but then, as you could see, Friday, with 1 hour to go in here approximately, it has been strong all day long. Bitcoin closed gets over 1,000. I'm not sure about the close on the day because I'm not sure of what time it closes. Over 6,000, and that is incredible. A little party never hurt nobody. Well, this one's going to hurt when this bubble pops for sure. So, strong market that we see again today with the S&Ps up right now as we come towards the end of the day, up some $11.50 in another very, very strong day. So, big day for the stock market again on a week that has been, as you saw, kind of hesitant early, but then making solid gains. The stock market for the week, S&P 500, NASDAQ, Russell, all up a little bit more than about 0.5% on the week. That's even with the big lift that we're getting today. Dow Jones Industrial Average up very close to 2%. As it's strong based on the move in IBM this week. So, and some of the financials, which look very toppy to me, actually getting a bit of a rebound in here. I still think they're very toppy. The bond market, 30 years down over 2 points, giving up 1.5 points on Friday. This is, again, all about the tax deal. It's they look at the tax deal as inflationary. It's going to be hard to get inflation, but the problem is that you need to get some wage inflation, and it's tough to get when you have technology as invasive into the workforce as anything is. So that's really the problem there, and why we're not getting any real wage inflation. Plus the huge hole that the Fed dug back in 2007 through 9, or the bubble that broke in that period anyway. So it's hard to get the wage inflation, and but the traders are looking at that. Bonds fall 2 points. I'm going to show you, I think they're getting to the point where they're going to have a rally. We've been timing it into this time period for this break. And we talked about that last week in the short-term view. We thought there was one more trip to the downside, and that's what you get. So 10-year yields up about 10 basis points on the week. Big pop in yields. Dollar higher as higher yields drive money towards the U.S. currency. Not an explosion. It's up about 2/3 of a point on the week, but we'll call it firmer. And as the dollar moves up, of course, gold moves down. Also, we were looking for another trip to the downside in the gold market. As expected, it moves down. $25 on the downside in gold. Silver about 40 cents. We've been talking recently on some of our member videos about the gold-silver spread, and we think that fairly soon it's going to be favoring silver. So you're not a member, you want to become one so that you can see that video we recently did. Oil moves down a few cents overall. OPEC still defends it, says they'll extend their cuts, and other talk about the market being in balance. But I'm going to show you the drilling stocks. They're under pressure as they look to be having some problems as far as how to boost their earnings. So the market makes new highs again, right? The stock market, how many times can investors celebrate the same thing? They've been moving up based on the potential for tax cuts, and now we clear the way for tax cuts and they move up again. If the deal does come, the problem is that what they're going to have to do in order to get some sense of control over this deficit is they're going to have to get rid of these SALT deductions. That's what they're talking about. So that's the state and local taxes. I mean, we get to deduct those, right? And it makes sense. And for a lot of people, losing that deduction is going to be big. And for some people, it's going to mean that their overall tax cut isn't there at all. So there are so many things that are going to bring a big battle as each one of these senators steps up and tries to protect their own states, especially in Medicare cuts. And that's what we're probably going to end up getting some tax cuts and doing something to try to repatriate the dollars that are out there. But tax reform, true tax reform, well, that also means looking at the deficit and doing something about that also, making government much smaller so that you can tax people less. And then the government down the road has the money to help the people that they want to help. So that's what true tax reform would look like, and we won't be getting anything like that. And it won't be long before investors do start to see that they partied too hard. That's really what's going on right now. And I think that, even if we do get the tax cut, which is likely we'll get something, I think it's going to bring a big hangover. That's what I think is going to happen. It's going to be likely a sell the news event. So now what I want to remind you is that you can follow me on Twitter at askSlim, subscribe to me on YouTube, and if you like what you see, put a thumbs up in there. If you don't like, put a thumbs down, and write me a little note also and let me know how we could improve what we bring here. And I also want to remind you that we have a special running. You can see all of our videos, all of our member videos, all of our 4 new videos we do every week for our members. Just a spectacular way to learn in the markets. All of those 250 plus videos and all the new ones. Take a peek for 1 month, just $16.50. Write me at slim@askSlim.com and I will send you that special link. One more little notice I want to give you just in advance is that 2 weeks from today, we won't be having a market week. It'll actually be an abbreviated one on Thursday. We're going to be, or I'm going to be, attending the Las Vegas Trader Expo. So if you happen to be attending the Las Vegas Trader Expo, then pop me an email at slim@askSlim.com. If you want to just say hi to me, we can pick a time that we can meet up and love to pick a spot and time that I can meet a whole bunch of you, so that I will be there on Friday the 3rd and Saturday the 4th. So if you happen to be going to the expo, let me know, and I will be glad to set something up where we can meet. That'll be a lot of fun. All right, so now we're going to get to our best and worst of the week. All right, we look at the best and worst stocks for the week every single week, where we look at stocks that have had big moves, earnings reports, analyst things, and especially where they get up to areas on my analysis that I think is important to show you. And I like to always show you the biggest movers of the week. And the biggest mover to the upside is a spectacular move to the upside, and that is Skechers. Man, there are times in here where we've been negative on Skechers, and we've been right. We haven't talked about it lately. It was coming to a time where a bottom was due, and I'm going to show you what that looks like and give you a little cycle analysis lesson in here as we look at Skechers. You can see in here that there are these half moons, or cycle brackets as we call them, on the bottom. Each one of those gives you the sense for phasing. In other words, the rally phase and the declining phase, and points to a time period, an approximate time when there should be a low. So a rally and a decline and an approximate time period where there should be a low, and then the rally and the decline and the approximate time period. You can see that. And each of those rally phases were, well, they gave you good rallies. You can see that in Skechers. Look what happened right in here. They had a huge beat. Analysts all over it, upgrading, and the shorts have just got absolutely squeezed in there. And you can see it moves into this area of resistance, multiple peak resistance. There's a bunch of peaks way back over here. That's an important level. And then right over here is a fib extension level. We believe that this area of 34.5 to about 35.70 is going to contain the rally. I think this is absolutely a crazy amount of movement here to the upside, and likely to bring some pullback. But overall, we would expect some number of weeks before there was a high. And you could see that based on this move, our overall projection is that this upward trend is going to stay alive, and that it would pull back and then have another move out here into next year. So that is a look at a massive move in Skechers. In similar stocks in a similar group, which is basically consumer goods, Under Armour, UAA up about 5% on the week. That's trying to bottom in there on our work. And Nike up about 4% on the week. And we've sent out a notice to our members on that one that there's something important happening in there also that is positive, that we would suggest that. Well, it probably creates a nice positive bias in there. But if you want to see that, of course, you got to become a level 3 member, level 3 and 2. So that's level 3 and 4 is the ones that get our notices every single day. So that is a look at Skechers. And the next one we're going to look at, similar group, is the retail. We look at this one all the time. This group starting to really divide up between the good and the bad. Kohl's is one that's up 7% on the week, and I'm going to call this the good. This is a stock that is potentially very good. So I'm just going to zoom in here a little bit so you can see what our cycle analysis looks like. There are a lot of things pointing up to a target zone right up over here. That target zone is basically 49 to 51.5. The stock is trading 44. What do you see in here? Note the saucer bottom that occurred. Note how the left side of the saucer was a negative cycle. Note how the right side of the saucer was a positive cycle. Note that inside of this was a inverted head and shoulders right in here, and the inverted head and shoulders right in here points up to the measurement right up over here to about $50. So that also is a fib extension target zone right up there. And that's actually the 100% that's mislabeled. Let me just fix that so that you can see what I go through every single day as I update these. That's the 100% fib right there. So, and there's the major 618 fib right over there. All of that points into that zone. Now look at this. This is the engulfing pattern right there, right at the cycle low timing. What does cycle low timing mean? Well, here's your cycle low timing. You see the low in here and then the rally period? Bang. The low in here and the rally, bang. But that's just kind of a negative cycle. The low in here and then the rally, bang. And the low in here, week number 1 on the upside. Well, if that's only week 1, you got a lot of weeks left to go up in here, and this is a super bullish pattern. So I just gave you a cycle lesson in Kohl's. Take a look at Dick's, DKS, and same group, right? Sporting goods in this case. There's an ugly pattern for you. So this one is in the middle of a cycle. It's got to bounce up 8% on the week, but you can see it's still in this negative declining phase. So that one is one that looks absolutely horrible. So that's a look at the retail and what looks to me like, well, great pattern when you look at Kohl's, and not a good one at all when you look at Dick's. The tech stocks are the next ones we're going to look at. We have 4 that we're going to look at in here to wrap up our best of the week, and we're going to start out by looking at Adobe, ADBE. Some of these patterns and some of these moves are pretty amazing when you look at this. This is a case of, again, the cyclical patterns suggesting that a low was due and getting a monstrous rally on it. Here you can see that the predicted low right over here on what we call a nested pattern, in other words, there was a small and a big one, called for the low here. Of course, we only know that it's going to move above here. The probability is about 70-75% that that would happen. There's no way we can tell it's going to move all the way up to the 100% fib. But what we can do is see the bullish patterns, 1, 2, 3, 4, and now 5. So this is third week on the upside, and here not likely to top. As a matter of fact, our upward projection right in here is 190 on this stock, and Adobe, a absolute monster in there. Cree is a stock that's up 11%. This is a stock that we have loved to dislike, and we've gotten a lot of periods that we thought it was moving down. As a matter of fact, this stock was on my list of riskiest for this year, and it actually for most of the year was having a lot of trouble. So here's where it closed the year right here. You can see the big declines that it had right here, and now all of a sudden this thing comes to life. They guide up. Analysts had some negative overall weak results. What confuses me about it is that it was down 6% overnight. So when I see that, and then I see that it had this massive move to the upside, I say, holy cow. So it was a wild move, and it got to up 20% from down 6% when they reported earnings. I think that based on this, you can see that this is some crazy extreme, and it is likely top. Now, based on these cyclical patterns, you can see that when you get into the final 2 or 3 weeks, a period right in here, that's a period where it goes down. This one is different because it held up with only 2 or 3 weeks to go. So we think it's going to have a pullback, but then that'll be a buying opportunity and it moves up again. So basically our call for it being one of the riskiest stocks of the year was correct up until this week. And that then changes it as it now moves up for the year and is up about 25%, all happening this week. So that's a look at CRE. The next one is IBM. Now, IBM is a stock that we were suggesting that would do really well on earnings. We put in what we thought would be an alternative cycle based on earnings that gave it a big lift. We thought there was a good possibility for that, and you could see it move strongly higher. This one we think is going to try to get a little bit higher in here over these next several weeks, and then eventually have some little bit of a pullback. But for now, it looks like IBM might have attracted some buyers. The problem in IBM is that their revenues are just falling quarter after quarter, and they only paid an 11% tax rate. And so there's a lot of funny business going on to get the investors that excited about it. In order to maintain this, they're going to have to get their tax rate going up and still meet earnings or do better on earnings. That might be a challenge. So that's why we're not overly optimistic in IBM when we look at this right now. The next one we're going to look at is MXIM, Maxim, and you can see in here another stock that was in a very positive upward move and explodes to the upside. And here, man, look at that upward trend. Look at that 34-week moving average as it just continues on the upside. And here, and it has been just super bullish on this intermediate term chart. Earnings beat. Analysts are very positive on it, and our upward target is this 1618 fib extension up at around 54. So it's about close to 52 right now. Got over 53, and we think in the next couple of weeks it will get up near that 54 level at that 1618. So that is our best stocks of the week, and we're going to come back and show you our worst. All right, for the worst stocks of the week, we're going to start out looking at an airline stock. Now, most of the airline stocks look okay to me. They're getting in toppy areas, and some of them looking kind of toppy. I'm not ready to declare the group as negative yet, but when you look at United Airlines, you got to start to wonder. United Airlines came out. And after their earnings, the analysts essentially grilled the company and then got, the company basically saying that they've gotten themselves in a competitive hole. And the investors didn't like hearing that at all, and that got the stock moving to the downside. That was a failure at a very key level. What's the key level? Let me show you. First of all, I want you to note the breakout here at the 34-week moving average. Then the whole cycle that came down and tested the 34-week moving average. Then the breakdown at the 34-week moving average. And then the next rising cycle, which came on time with the group and now engulfed right here with that big red bar. That turns it down at the 50% and the 34-week failure, and then turns down. That says the decline goes down through the end of the year. That is a very scary pattern when you look at that, and you've got to consider that the rest of the airlines might start to top in here and be in trouble. So that's a look at United, down 11% on the week, and giving some, we'll call it very scary signs in there when you look at that for maybe the group. And if the transports start to roll over, it's going to start causing some warnings in the stock market. Let's move into the techs here and look at AdTran. Here is AdTran, and you could see this big giant move down in here. That's a 10% decline. Their earnings were kind of mixed. Note this just huge decline in there and that kind of big engulfing pattern or a giant evening star right there. It gets down close to that level of that cycle low already. That says that it's very likely to be, quite negative when you look at that. If I look at this level right in here and put that right there, that's essentially 21.25. If it gets below that, it's called a cycle breakdown, and it will establish it being negative. We've already anticipated that because it's given up 90% of that upside move. So this is a very bearish looking stock when you see that. Take a look at this. Look at this. It opens higher on that earnings and engulfs a month worth of trading right there. That is incredible. Momentum turns negative here on the slim ribbon, and that is saying that there is trouble here in AdTran, and not a stock we look at a lot, and that stock is really looking like a breakdown. Let's take a look at biotech. Celgene is the one we're going to look at in here. Celgene has got a drug problem. They've abandoned one of the big drugs that they were looking at, which was for Crohn's disease. Stock is down 10% on the week, and maybe a little bit more than that now. Now, here's a look at one of those cycle low breakdowns that I just showed you I thought was about to happen in AdTran. This one has broken down. It points to a decline, and potentially over these next couple weeks all the way down to 113. There's that support zone that we have in there. So that looks to us like it's got some severe trouble. We'd expect a minor bounce after that and then moving to the downside again. And overall, the biotechs are looking very toppy. So there could be something in there that is setting up for trouble in the biotechs. And of course, biotechs roll over in a bad way. That's going to weigh on some of the indexes also, especially IBB, which is the biotech index. So we're going to look at the drillers now. I mentioned them earlier in the show that they were looking like trouble. Schlumberger was a stock that we had as a positive setup. We believed it was setting up for a rally to move to the upside, and then their earnings came out. They were small to the downside, and they warned, and we were wrong, because Schlumberger ended up getting a big break and maybe setting some trend in here for this entire driller group. That does happen. Don't forget that this stuff does move in synchronicity, as we call it. Here's that Schlumberger chart. Now, what we had anticipated was that this rally right in here was going to resume. In other words, this pullback right here was going to get it to move back up into the resistance zone again. That's what we anticipated. This warning right in here got us, and the stock moves down in a sharp way, and that is a breakdown. You can see it gets under that last cycle low at 62.50, and that now points to a decline going in here all the way down here into January, and says that there are trouble here and potentially trouble in this entire group, the driller group. Let's take a look at Transocean, which is rig right there. There's a bearish engulfing pattern right there. That says that it topped right in that resistance area. That's the major 38% and the intermediate 61.8% right there that it engulfed right around. That is a topping pattern, so that looks bad also. And the last one in here is Neighbor, NBR, in this group. And you could see right there, there's your evening star as it rolls over, and gives you some sense of a topping going. Also, right over here, it's approaching that low near 619. That points it to a decline into January also. We have a lot of things that are pointing to declines into January. We've recently done some videos on that. And if you want to see that in our member videos, we did one that showed the stocks that we thought, the 29 stocks that have the biggest risk for the fourth quarter, so of our 320 stocks that we look at. So you probably want to see that again. You can become a member and see that video. So let's take a look at one more stock here in the worst of the week, and that would be Apple. Now, Apple wasn't down that much. something like 0.5% or less on that bad news where Apple fell $4 in one day. On our work, though, it really is meaningful, and I want to show you that as Apple, in our opinion, is setting up for a big hit to the downside. Again, this is going to be very significant to the market, and again, if you look at the timing that we're looking at in here, it points to a decline into mid-January, which is in so much alignment with everything that we're looking at that we're anticipating the whole market has that correction. And I will show you only the short-term view coming up in a couple minutes. But here is Apple right in here. And this is what's really key. So what you can see in here on the bottom is that we call this a cyclical harmonic family right in here. So this one is made up of two cycles. And you can see in here the small cycle often is the second small cycle often holds a bigger correction right in here than the first one. The first one often is part of a big rally, and you just get a small correction. Then it continues up, and you get a bigger correction. You can see that how that happened right in here. Small correction, bigger correction. Now what you can see has happened in here is that actually the middle one right here, or the first one, has a little bigger correction right in here than any of these other ones have had. That, and now you can see it failing here on that news right in that resistance zone right there. Our projection is for this stock to get under 146, maybe down to this area at about 142 between now and mid-January. That's a pretty big decline in there as it fails in here in a big way on that news. So we call this danger. We think Apple is a sell. We think it is a short for active traders, and that Apple could be presenting a lot of problems for the stock market also. That's the worst of the week, and here comes our short-term view for the coming week. All right, here comes our short-term view for the week. Do this every single week where we look at 5 major areas of the markets, energies, the dollar, the gold, silver market, treasury market, stock market. And looking at only the short-term charts in here because it's a short-term view. And we basically like to project out between like 1 or 1.5 weeks as we're looking at this. The stock market continues to be the one that we have the most challenges with. We did actually really well this week if you don't focus in on our stock market call, because we were really very close to right on almost all aspects of our analysis on the dollar, euro, gold, silver, and the bond market. We're going to get half credit on the light crude market because it did half of what we said, and we thought it would come down and dip and then rally later in the week, and it came down and basically hit the target zone, but it hasn't had an opportunity to rally yet, which actually we think is going to happen in the next week. So we get 65% on the week, and we're happy to be back up to a level where we would like to average about 2/3 or 2 to 1 in all of these markets that we look at. So take a look at /CL as we put up the daily chart in there. And we're going to look at the level that we expected it to come down to. And you can see it actually, the pattern that we talked about was that we thought that it would come down into late in the week and then rally. But that rally isn't enough in there. And the support zone is basically the zone that we expected it would come down to. So where do we get that from? Well, actually, you could see a lot of clarity in these smaller patterns right in here. And that is, okay, see the big low right here, how that lines up, the big low right here, how it lines up, and the big low right here, how it lines up. Each of those made up of 4 small cycles. And those are 1, which is an odd one because it was a little lower, 2 right here, 3, a shallow one, and then 4, and remember the last one often has the big correction. So that's what we got in there. Here's the first one right in here, and then we're moving into a rally period. That's this right in here. We're expecting an upside move in light crude this week. We think that it's likely to get back up to that area of about 52.50. We're not overwhelmingly positive in here, but still we think this is setting up for an upside week. Here's your upside momentum. You can see in here light crude, and it's looks okay. I mean, it's pretty solid. These other indexes in the bottom are not giving any kind of signal whatsoever in light crude, so we're looking for 52.50 in there. Natural gas is the next one we're going to take a peek at in here. Lots of people that we trade that are our members and trade this like when I stay in touch with this. So here is an important area. So this is an area in here that we featured as nested lows. We thought it would fall into this area. It's a little hard to see because of how gray that is. I'm just going to activate this and move this down a little bit right there so you can see. So there's that nested low area that we warned about right here. Note this day right here. That's that big hammer bottom that came right there. It's spot on timing. So I just wanted to note this, that we were hoping that natural gas held up and avoided getting below these lows over here. It did not do that. This is a warning that the longer term could be in trouble. Still, we're looking for a rally in there in natural gas. Now, you can see in here the momentum still negative in there, so it's got some work to do before it, but I wanted to show the natural gas because if I omit it and there's something significant in there, I get emails. So there you go. There's natural gas. We're going to take a look at the dollar right now, which we thought would have a small change on the week. We thought it would go down and then bounce back up. That's exactly what it did. We thought the same thing for the euro. Well, opposite, because they trade opposite. It would go up and then pull back. So take a look at the dollar index right here. And you can see that it basically got down in close to that slim ribbon again. We thought that it would pull back and then rally late, and that's exactly what it did. So now we're in this area where it should get a little more rally. We're going to look for a test on the upside of 94-ish right in here. So here's 94 coming right across there. So kind of getting up into here, and then starting to roll over as these cycles take over. So we're looking for opposite of what we were last week. We think we're going to get an upside move into that 94 area and fail. Look for a relatively small week though. When we see, this positive area in here on the momentum, and you can see how long it was negative in there, and it getting a little bit overbought, well, in that case, we think that the upside is going to be limited as we do, and maybe just have a small week when we look at that. I'm going to stay on the momentum chart, and you can see in here the euro, which trades opposite, and there you could see it's a little bit getting a little bit oversold. It's negative momentum, so we're looking for a little bit of a move to the downside in the euro, complete this pattern, and then move back up. So that is a look at the euro. We only see a couple few days on the downside, a couple few days on the upside in the dollar, and then reversing in there. The next thing that we're going to look at in here is the gold market, /GC. Computer's a little slow today, isn't it? So here's what we expected. We thought that gold would have a move down to under 1285 and then set up a rally. So here it is right over here. It moves down to about 1280 into that support zone, buy zone. We have that listed for our level 4 members, that this is the area, and this is the point where we expect it to tick up. So we're looking for this cycle to push it up, and we're going to call for an up week. We're not going to project the upside level at the moment, and we think it could chop around a little bit because, remember, we said the dollar has a couple days it could still rally. So we kind of think that it'll play around a little bit and then move up right over there. We think that silver is going to do the same thing. You can see in here gold, negative momentum, oversold. So we think it's got work to do before it can get any real kind of rally in there. Take a look at silver. And silver market, you can see in here, same thing. Here's the buy zone. We expect it to move up from this zone right in here and have a positive week. And when you look at the silver momentum, Notice it's neutral. Remember, gold was negative and silver is neutral. And we have other things that we shared with our members this week that show silver as stronger than gold. So that's why we think that with silver down 40 cents on the week, gold down $25, buying silver and selling gold makes some sense to us. So we think that the relative change between them will favor silver on the upside coming up in here. So we're looking for some chop in here, a little bit, a rally maybe mid or late week, and then probably ending with small change, potentially small to the upside in there. In the gold and silver market. So next thing we're going to look at is the bond market. We're going to look at /ZN first. So what we thought was going to happen, if I get the ZN up, what we had been showing in here was, let me go a little further out so you can see it. You can see in here that this was the cycle low timing range that we've been showing. There's what we call out of phase cycles that are in here that pointed to a low here and pointed to a low here. We believed that this would fail in the resistance zone. We had a price target up here for failure of about 25.30. It was about 5 or 6 ticks below that and then failed and then turned down. What this looks like to us is that it's going to maybe chop around, be a little lower in here for a couple days, and then turn up. We're going to look for a late week rally after it struggles, and another one that's likely to give us small change, but then the odds grow of some bigger gains after that. We're going to look for small change in there, potentially small to the upside if it can avoid getting hit too much early in the week, but it's really hard to call in here because the bottom really looks like it's a few days away. The ZBs, what we thought would happen, would get up to 153.30 and then roll over. It got up over here to about 154.02, so or 3. It made it by a few ticks above the level we were expecting, and again moving down. So we thought it would come down into this time period. The same thing, a few more potential days down in here. Maybe we test that low at 51-ish. Down there and then turn up. When you look at this, it looks like, struggle for maybe more than half the week and then start to turn up. And it will be 2 weeks from now that there is better upside potential in there than there is in the next week. So kind of just bouncing around, and what we think is making an important intermediate trading bottom in there in the bond market. So that is a look at the bonds, and basically kind of choppy and looking like they're going to go down a little bit and then start to recover. 2 weeks from now, the better time. So now we're going to look at the stock market indexes. I said down week. Well, it certainly was not a down week. What I anticipated was that the S&P 500 would fall down to about 2542 sometime into the 3 or 4 days into the week, and then begin to move up again to new highs. I'm going to get minimal credit for this because it's an up week, not a down week. Though it did have the decline lasts 36 minutes. So how much credit could I get, even though the pattern actually was pretty close to what I expected? So forget about that. Nobody made money on anything I said in the stock market indexes last week, though we had some very good stocks. So in this case, we are moving up again, and we have established very significant numbers in here. Now, what we're getting is, and I got to say that my analysis is more bearish than the cyclical patterns are suggesting. So if I look right in here at these last cycles right there, when you get long rallies and small declines, you continue up. So in this case, long rally, small decline, long rally, small decline. We anticipated it would get right down to this level, down over here, and it actually stalled a little bit above it, and this decline was basically not tradable. at all. If you came in short and didn't cover in the first half hour, well, you were crying at the end of the day. I relate. And now we move up, as you can see right here, getting up to 25.74. And the way that we have this analysis drawn is that it's likely to roll over. The reason is because of the intermediate patterns are suggestive, and also we have so many chart cycles on stocks that are pointing to lows in January, rolling over and going down into January, late December, January. So we believe that this upward pattern is going to roll over. We have a negative bias based on our intermediate read. That's the problem that we're suffering with these long rallies and almost untradeable brief declines that you see right there. Now we're only 2 days into the advance. It's pretty hard to get a peak on the second day. We're going to look for the next week to be fairly choppy in here, not be able to make much upside ground. And then out over here, this is about a week and a half from now, that it rolls over. We're going to call it rolling over by late week and then starting to move down. This is a very key level, the low that we made last week right there. That's the short-term cycle bottom, 25.48. If it gets down close to that, it's going to be a very bad sign and say that I'm right about it topping. In the meantime, I'm owning that my bias is more negative than the cyclical patterns should have me being, and it's really based on longer term patterns, and that's what's really had me thrown off in here. Can you imagine a 36-minute decline there, and that's all we get into that period that we're looking for? That's exactly 18 days from this last low, which is right in here, I mean spot on, and then rallying again. So the next low is out over here in the middle of November, and all of this trading in here is going to tell us a story if I'm right about that. Here you can see that we're getting a little bit overbought, but look at the monstrous upside momentum that we're seeing in the S&P 500. Take a look here at the NASDAQ and the X, and you can see that we called for it to decline into the area of 60.51 by the third or fourth day of the week. It gets down to, well, the low on this bar is 60.51. So that is really a spot on touch right over there, and that is pretty amazing. So now you can see that's also a key level, 60.51. Now it's not making a new high, and we think that some of these tech stocks are in trouble. Like I told you, Apple we think is in big trouble, and it's possible the NASDAQ is going to lead on the way down. But you can see in here, not as strong, but still very strong as far as we look at that. Now, there's one more thing I want to look at in here when we look. Well, let's just look at the Russell so that you can see that. And the Russell has gained some strength and is slightly overbought there. And take a look at the Russell here, and you could see that same pattern in there we were looking for, and then moving up. But what I really want to show you is the S&P 500, and look at a little timing stuff in here. So here's the S&P 500. The first thing I want to show you is that this is market forecast over here. I made a point that this was overbought. Market forecast is giving a sell signal right over there. We have not had a market forecast sell signal in the longest period of time. If you look over here, you get a sell signal right over there in market forecast. And all that did was signal a rolling over and a minor correction in here. They're pretty hard to get, and when you get really strong markets, sometimes they don't give you the most that they can. Here's a sell signal right over here. It called the top, and there was a pretty sizable break right there of some 80-something points in the S&P 500. So this one about 78 points, this one about 70 points, but you didn't really get a sell signal in there. So we have a sell signal now, and that is going to be important. Let's go back to here, and you'll notice in here that we project this rolling over at around the 24th or 25th of the month. That's the date that we're projecting the high. We talked about this last week in the VIX. And I'm going to show you one more time in here as we look at this. So we're going to put up the daily VIX in here. Now what I said was I thought that the VIX would continue to go down into this date. This is the 24th or 25th of the month, right over here. It had this panicky move to the upside over here, but you could see it couldn't even hold it for the day and then move lower again. This says 2-3 days in here potentially for the VIX to be struggling and then move up. That's the next period of weakness right over there in the stock market, and that is that area that I have it turning over in the S&P 500 daily chart. So that's to me very important, and I think that implied volatilities are going to soar on the upside in late October and November as we get into a much weaker period for the stock market. Man, I went into a lot of detail on that. I hope that that was valuable to you and you enjoy it. I want to remind you again that I'll be in Las Vegas on November 3rd and 4th at the Expo. If you're going to be there attending, send me an email, slim@askSlim.com, and I will try to set up a time that we can meet up just to say hi. That's it. Follow me on Twitter at askSlim, become a YouTube subscriber, and take our advantage of our videos, $16.50 for 1 full month, and then just leave if you want to, do all the binge watching you want, and I know that you're going to learn a ton. Have a great week. I want you to be careful because it is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to sit